Overpaying is something many of us try to avoid. When it comes to the stock market, paying too much could be financially devastating. Legendary investor Ben Graham argued that buying when a stock is undervalued and waiting until the market reaches full cycle is the best way to collect the largest returns. Coupled with that, Graham also stood by the principle of long-term investing, claiming it is the surest way to achieve investment success. It is a theory that is proven to stand the test of time.
Well, Ben Graham's advice was for investors to be successful was to stick with two simple principles. Number one, invest with a discipline, which would be price earnings, price to book, and dividend yield. And the second part would be to take that discipline and apply it over a longer term basis, i.e. 5 years. And he said the reason for that is on a short-term basis, markets are completely unpredictable. But if you apply the discipline over a 5-year time horizon and you go back and look at that, what it does, it smooths the volatility of the markets, which is considerable. And you get pretty consistent positive returns over the entire period.
A perfect example of how to put these principles into action is by looking at advertising stocks back in 2008. As the recession struck, businesses scaled back on advertising and the industry took a hit. As a result, advertising stocks were undervalued, but not going anywhere. Those who bought into advertising between 2008 and 2009 paid a low price and are seeing a rise in value as the economy begins to heal and advertising dollars start to flow once again.
I mean, the biggest problem in the market, the Achilles heel of the market for most investors is they get excited about some great new discovery or some great new product, and they wind up overpaying for that stock. I was just at a conference recently, and all they talked about was potential for growth, potential for earnings, what have you, but nobody ever mentioned, the discipline of price relative to the earnings. And it's only after things don't work for a while that the interests come back to where people say, well, maybe I better be careful about the price I pay for things. And that's when the situation we're in right now, where all of a sudden markets haven't done that well for the last 10 years, but people are starting to get interested in dividends, which is the most conservative aspect of value investing.
Although his principles were established decades ago, Ben Graham is an icon in the investment world. As global markets ebb and flow, his philosophy is still relevant today and will be for generations to come.
The reason why Graham's advice was so important is that when I started the business, the market was 1,000. Here it was, 15 years later, still at 1,000. And if I had listened to him when I started and I bought the cheapest stocks on a PE basis, instead of buying what were the most popular stocks of the day, instead of having no return after 15 years, you would have had a 1,500% return with the lowest PE stocks. That got my attention.
Since 1983, Schafer Cullen Capital Management has developed a variety of value-based strategies by using the principles that made Ben Graham a legend. The investment strategies at Schafer Cullen are helping investors achieve long-term financial success and do so by making sure every stock meets a strict list of criteria that is proven to work time and time again.
When we look for investment ideas, we really scour the globe. We take the whole universe of global stocks and we narrow it down to the ones that we find to be the most undervalued based upon the price to earnings and price to book ratio primarily. From that group of securities, we look for companies that have exciting catalysts, really something that's a positive change in the company that would improve investor sentiment. And that could be something like a new product line, getting into a new high-growth geography, or just simply a management change that would turn around the company. We do very detailed analysis on both the quantitative and the qualitative aspects of the company. From a quantitative position, we look at all the financial statements, we comb through all of their financials to make sure we're comfortable with their positioning. And then from a qualitative aspect, we look at factors like management quality. And we almost always do calls away from Wall Street to get an objective view on how that company is positioned in the industry.
Making a call away from Wall Street is a practice that helps filter out good information from bad about a particular company and is standard procedure among the analysts at Schafer Cullen.
The problem we have as money managers is we get deluged with information every day. And usually it's about companies that are doing really well, written by smart guys. And, but we're trying to buy stocks that are inexpensive. And most of these research reports on companies that have really done well. And so how do you figure out, how do you get around the popularity? And the one way to get around it is to make a call away from Wall Street. What it gives us is some insight into things that aren't in your research reports. And we have a zillion money managers all looking at the same data. But if you make a call to a competitor, what you're going to get is a whole different read on the company. They'll go into maybe management, maybe accounting, maybe competitor problems, things that aren't going to turn up in a research report. So it's very, very important.
At the core of Schafer Cullen is the commitment to never overpay for a stock and to make sure their purchasing decisions have long-term success for an average of 3 to 5 years. Through discipline and intense research, the financial experts here remain rigidly focused on actual investing, not a short-term fix.
All the publicity that you hear on Wall Street every day is about trading, high-frequency trading, technology, and there's very little on actually long-term value investing. And we think it's very important to get the word out because that's what's going to help people over the long term.
Schafer Cullen Capital Management is dedicated to providing unparalleled financial advice for the most discerning investors, serving as a pillar within the industry today, tomorrow, always. For more information, log on to schafer-cullen.com.